just wait for the right side of the V and try to catch a trade in this zone. When I see the 1.81 reach, I say, okay, maybe it's time to get out. Okay, 7.7 is not normal.
Okay guys, so I hope you just finished interview with Ale here. I hope it gave you a lot of value. But now I think we're going to get even more value because Ale is going to show us one of his best trades. I think it's trade on British pound, US dollar or
Euro, Australian dollar.
Okay, yeah. And how much money did it bring you?
More than 7K, nearly 8K, 7.7 thousand.
Yeah, that's beautiful. So if you can please share your trading view screen and maybe show us your setup.
Yeah, of course. So before going into that, I would like to bring some value, no? Because I watch a ton of interview and sometimes I say, okay, but you didn't explain nothing. So I don't want to be that guy and I want to bring value to the audience, no? Also for the respect of their time. So first of all, let's try from the basic. I'm not gonna explain again the supply and demand because I'm a supply and demand trader basically. I am just explaining what it's different. If you want to know better, go to the Burn YouTube channel. If you understand English, if you understand Italian, go to my channel. If you understand English, go to the
What's your channel called, by the way?
Alle Donofrio, my nickname and my surname. The two main things that I use are COT report and the bias. What I mean by bias, okay? Because the bias is a thing that I introduced because of the shutdown, okay? It was this big shutdown, called COT report doesn't exit, so I say, okay, now how can I have a point, a star to follow, no? And it's a very simple concept. So this is a bullish candle, okay? And these are the wick, okay? You have top of the wick, and you have the other, okay? So just watching this, you have no information, but watching the candle before, okay, let's assume this is a bearish candle, okay, and you have the wick, okay, you have a wick right here, and you have maybe a longer wick right here, okay? So now you have to point out your attention to the closure of the candle, okay? Now the closure is up right here, okay? If the closure is above the high of the previous one, I'm expecting the price to reach at least the high of the current candle. And this is a huge thing. Why? Because if I see the price start and go lower, so
sorry, but what time frame do you use? Does it matter?
Doesn't matter.
Okay.
This is happening every time. It's a fractal concept I use from the 12 months until the daily, the 4 hour, the 1 hour. So if I see a candle born and go down like this without taking the high of the previous one, because this is my bias, no? My bias is to take this high. I say, okay, maybe it's a Larry Williams concept. Maybe this is just a move to the downside for going up again. And this became a wick, okay? This will be a wick, or not this, but sorry for that, this. And the price goes up. And for show you best is, let's go to the monthly time frame of the DXY, okay? And follow some candle. You know, I have this indicator. My bearish candle are the black one, bullish candle are the white one. The green candle are the candle that are taking out the low and close above the price of the previous one. And on top of that, the red one are the candle that taking out the high and close below the closure of the previous one. So let's follow the bias concept in each candle from October 2024, for example, no? Okay, so this candle closed above the high of the previous one, so I'm expecting this high to be taken. And this happened. This candle closed above the high of the previous one, and the high has been taken. And again, this candle closed above the high of the previous one, and the price taken. Now, this candle not close above the high of the previous one. You see? Didn't close above the high. No, this is the high, and price didn't close. And so I'm expecting this low to be taken. And now, just because I don't want to be a guru, let's go like this and follow this thing. As you can see now, I'm expecting this high to be taken because this candle closed above the low of the previous one. And this didn't happen, okay? So this concept doesn't work every time, of course, okay? But it's a good...
Yeah, we see a doji candle, like it might mean a reversal in the market.
Yeah, let me check this. Okay.
Perfect doji.
So let's close this candle right here, the monthly candle. Oh my God, how many clicks I have to do? Okay, so this candle closed below the low of the previous one. So I'm expecting this low to be taken. And this is what happened. So let's see the market close again. I think you got it now.
Yeah.
But now this candle closed below the low of the previous one. So my bias is to take in this low. And let's see. Price move up. And I'm saying, okay, this is a fail movement to the upside because my bias is to take in this short. Okay. And I'm trying to search for a sell. And look what happened. Price close inside. When the candle close inside the previous one, so these are the low, these are the high, these are the low, price close inside, my bias is still this low, okay? So price move and take out our bias. And now let's see how this candle close. Okay, so this candle closed below the previous one, so I'm expecting this low to be taken, already taken, okay? So for this month I have no bias, so I'm just waiting this candle to close. And let's see. Okay, this candle closed green above the previous one, so I'm expecting this high to be taken, and this is happened. Let's see how this candle close. It's a very... Now this candle closed below the high of the previous one, so I'm expecting this low to be taken. And this happened. So it's not 100% concept, but it's worked very well. Now, let's look at this. This candle didn't close below the low. So my bias is to take this high. Okay, let me remove also all the other drawing. Okay, so I'm expecting this high to be taken. But you see, from October 2024, this concept was not expected for only 1 month. Okay, so now let's see how this candle close. And this concept, look, this candle closed above the high, so I'm expecting this high to be taken. And this concept is work in every time frame, okay? And now we can make also a prediction for this month, because now we are recording in January. So this candle closed below the closure of the high of the previous. So I'm expecting this low to be taken. Let's see. Okay, low taken. And now let's see this candle. Okay, this candle closed below the low of the previous one. So I'm expecting this low to be taken. And now we are in January. Look. Boom. So my expectation for the dollar index this month is to go in low. So when we present this kind of setup, I call it the broken slot machine, no? Broken slot machine, why? Because price move up without taking the low. So there is something that it doesn't, this movement to the upside is only looking for a sell. And now I say to you, I would like to go long on GBP USD because of that, okay? And I'm going here on the daily. I try to catch some long position right here. It depends on how this candle close, but I'm looking for long on GBP or long on euro dollar, because look at this on the daily. for example, this candle closed above the high of the previous one. So this is my bias. And if I see a candle close below, look at this, maybe this candle right here is closing like this inside. So on today is Wednesday, yeah, on Thursday, what I'm expecting price taking the low of this, have a reaction in some point, and enter a long position trying to catch the daily bias. Okay, and the last example I want to do is the USD JPY annual time frame. Look at this. Let me remove all the drawing. Look, the 2024 year close above the high of the previous one. So I'm expecting this high to be taken. And price start and go down, 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 down until at some point they goes up again. Why? Because my bias is always the same one. So if I see the price drop, I just think, okay, it's a fake move to the downside because my bias is still long. Okay, and you can apply this in every time frame. And this was a huge part of my not shut down. Okay, because I've tried. I have to find a way without the COT to have a star to follow.
That's amazing. And do you actually now use COT plus your bias?
Yeah, of course.
Yeah,
yeah, of course.
I have to say this is an amazing opportunity for the viewers because we are filming in the end of January and I'm not sure when we will release the episode, but I guess there will be more candles in the chart, so you can actually see if the bias works or not.
Look, for example, for how the 1 year candle close. It's closed below the high of the previous. So I'm expecting at least this move in the DXY, you know? So if I see price go up, I say, okay, it's just a fake move because the bias is short. It's a very powerful tool, so go back test it. Don't trust a bold guys on YouTube, but you see, we make the back test in DXY from October at just 1 month right here. It doesn't respect the bias, but if you follow.
Okay, so you have your bias now, so can you show us the other stars to align for you to actually enter a trade, and then maybe show us stop loss, profit target, and the risk you would take?
Let's go on our, the other thing that I want to mention is the right side of the V. Now, I try to explain in the podcast, but here it's more visible. And what I'm saying is, in your strategy, when you're finding the point of entry, okay, and right here we have a demand zone, okay, but I don't set a buy limit order right here. I never do that. I used to, okay, I used to have the buy limit order right here, but sometimes the price, boom, drop, and after that going up. So I say, okay, I cannot work like this, and this is a concept from Lance, and Lance teach, okay guys, just wait for the right side of the V and try to catch a trade in this zone. And of course, in the short environment, okay, you have your supply. Don't just try to guess, okay, where market will interrupt, because you never know. Okay, you don't know this, and go on the right side of the very simple concept, but very powerful. So going for the trade that you mentioned, I want to show you here. As you can see, I risk $1,000 per trade. And when I'm taking this trade right here, 15th of October, $7.7 thousand. I'm not showing this because I want to flex it out, but just to be
that it's legit.
Legit, yeah. Because I know that it's not a normal risk to reward ratio. But let's go back. We are now in Euro AUD. Let's talk about the bias. Okay, the 3-month bias say what? This candle close above the high of the previous one. So I'm expecting this high to be taken. Okay, this is what I'm expecting. And the 3 months later, they make an inside. So my bias is still the upside move until we're reaching this, okay? And what I notice is that the price take out the low of the previous 3 months. One of the pillar point of my strategies is, okay, you are in a demand, you are in a good daily demand, for example, but price take out some real low. Some real low for me are monthly, weekly, even daily, are very important to me. Even think about the 3 months, so a bigger time frame. No, so we sweep out the 3 month, the 3 month low. Okay, so let's go to the monthly. On the monthly side, there is a lot of rumors, but look at this candle. I call it a parent candle because this candle have all the other candle inside. Okay, so my bias is still the high because this candle closed above the high. Okay, now my my work is to find a good demand in this zone, trying to catch the high. Okay, and let's go on the weekly. From a weekly perspective, we have this beautiful green candle. The green candle are more powerful candle because they taken out the low of the previous one and they close above. So as you think about the swing low and swing high, this is an anticipation of a swing low or a swing high, because for the audience, this is a swing low. Okay, a swing low, it's a point where the other two lows on the left and on the right side are higher. You know, these are higher than this. So with this indicator, I will pin it. It's free. I'm not charging money for this. I make this, but I'm not charging money for this. It's really simple. They anticipate this part. So if you see a green candle, maybe you are trying to anticipate the right spot of a swing low. Okay. At the same time, this, if you see, are all swing high. This is a swing high, this is a swing high, swing high, and swing high because of the red candle. Of course, you have to put the context on that. This is not a real swing high, but is an anticipation of that. So I'm not reinventing the wheel. So let's go on the daily now. On a daily time frame, we are in this situation right here. So price hit this demand zone, but as you can see, we go down. And this is what I not want to be involved anymore. Okay, because you can trace a lot of demand right here, but it doesn't work out. So you're guessing why. And
do you use some indicator to define the demand zones, or you're just checking like,
no,
supports?
I'm just checking. I'm just checking. The thing that I want is that the leg out of the demand zone has to create imbalances.
Yeah.
Okay, if there is no imbalance, to me, there is no real demand. So this demand have hold the point. This is a good demand, but we are not in the right side of the V until they change it. Okay, so my huge difference between Alle now and Alle yesterday is waiting for the right side of the V. So even if there is this beautiful demand, I didn't trade it. I would just wait. So this also, this low right here, is the 3 month low that I say before.
Yep.
So we took out the 3 month low and now pump it up. So now the bias of the daily is this. Okay, why? Because this candle closed above the high of the previous one. And price retrace. So the sweetest spot was right here. And you see the fractal? This thing is the same one we are seeing on the 3 months. On the 3 months, we see a big candle, an inside candle, and now they're taking out the low of the 3 month. And this is the same pattern. So now it's the 14th of October. The trade was in 15th of October. So let's see. Okay, now I enter the trade. Why I enter in the trade right now? Because we are on the right side of the V. Okay, the right side of the V. So we hit the demand. We didn't break it at all because the price moved below, but you know, this is the right side of the V. Okay, so this is not, this is. Now also, as I said, we have the bias right here. We have our daily bias. And now look what we have here. This was my trigger. My trigger was this green candle right here. Okay, because it's an anticipation of a potential swing low. And it is. And price move up very in a powerful way. And I hold this for a few days, I think. Yeah, I hit the target right here. And let's be honest, this is a very lucky trade, okay? Because 1 to 7.7 you can only have if you have volatility, and also because the price from that point drop a lot.
Yeah.
Okay, but as you can see, this is the spot 78.46, and this is 78.46, and I exit in 1.81 through 2 days ago, 2 days after. Okay,
yeah, so that's a huge move for
yeah,
Forex market.
For my, yeah, this is a very lucky trade.
So
And
initially
also,
it was like 1 to 3, I guess.
yeah, initially
the green
was
line
the
was
green
a
line because
potential.
the bias, you know.
Yeah.
And after that, when I see the 1.81 reach, I say, okay, maybe it's time to get out. Okay, 7.7 is not normal, and also it's because we are reaching, if I remember, okay, this demand right here, this supply, sorry.
Oh yes.
We are reaching this supply, so I'm saying, okay, maybe this move is done. But as you can see, we start from the 3-month time frame. We start from the 3-month time frame, we go to the weekly, we're waiting for the right side of the V, and we execute on the 4-hour time frame.
It's amazing. Actually, so like before you enter the trade, the green line shows you the potential, and by this potential, you decide what the stop loss is gonna be, or is there?
The stop loss is below the low of the candle. Okay. Because if
Yeah. So it's not at the low, but it's below the low.
Yeah, it's a little bit below the low.
Yeah. Okay.
But you can also work with like this, of course.
Yeah.
It's a little bit more risky, but it's good because
What's the payoff?
If the price go down, maybe this is not the real swing low of the movement. So you can take the loss and re-enter. And you know what? The fun thing was that the trade before this is another try on the same day, and it was a loss. Minus 1,000. So as I said, my win rate going a little bit down because I try to find a good entry. Right now I don't remember, maybe I enter a little bit higher and I exit. Yeah, maybe I enter right here and I take this loss. But you have to trust the system, no? Yeah. I repeat myself, but it is. Because if I didn't click again, I miss a 7.7 R. Okay, so
that's a huge amount of money. 7,000 euros in 2 days.
Yeah,
it's insane.
It's so insane, literally insane.
Yeah, it's beautiful. You know, you can tell like actually the percentage of winning trades doesn't matter that much, because if you're keeping your losses really tiny, around 1,000 euros, then one huge trade is gonna help you massively.
Yeah, of course. Even if not my win rate, as I said, I take a loss the same day. Yeah. And the trade after was a 7-hour take profit. So
yeah, so literally a perfect trade.
So if I just want to summarize this thing, guys, go and study the bias and go try to understand the right side of the V. These are my 2 best advice today.
Okay, thank you so much.
Thank you, Peter.
So guys, you saw it yourself, what a beautiful trade, 7,700 euros, that's multiple average pace in Italy.
Yeah.
So very lucky day for Alle, but you can see that following the system definitely works. So see you next time.
Bye.